Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss two trades. One of them is a swing trade and one of them is an intraday trade. So let's get to it. All right, so here is this first trade. This was in the universal display. The symbol is OLED, OLED. This stock has been in kind of like in a very big pattern where the height of the pattern was quite substantial. And we have some data going to the left, so I'm not showing it here, but please check it out, because this would, contribute to the analysis. So here, in terms of the analysis, why we're doing this trade. So very definitive low into COVID reaction. We've seen diminishing supply characteristics on the last leg down. And then we have this grinding action. So this just kind of like shows this very slow vertical absorption of supply. Supply comes in, demand comes in. Supply comes in, demand comes in. Supply comes in, demand comes in. So when this continues until supply gradually is being absorbed to the point where the rally now could start advancing in a much more significant way. Plus we have demand that is emerging here. Supply occurs in the previous area where the stock was sold before. So this is our expectation that it's going to happen. Plus this level here is extremely important. Look how many times, 1, 2, 3, and now 4. And we have some event at this price level at around 200, 170. Either we are seeing a lot of selling, a lot of buying and selling at the same time. This was actually sold as well into strength. Then selling again. So selling, 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 selling again. And we want to see what kind of reaction we're going to produce here. So instead of, a COVID type reaction that we've seen, we're seeing a very, small reaction. Look at the texture of this reaction. If supply has occurred here, we don't see a lot of supply coming in. So supply is even at the lower level than in this area where we had that vertical absorption. So that tells us that supply is exhausted. And supply also cannot produce a meaningful result. We are kind of resting at this level with this reaction. Small spread on the way down, local mini structure with the selling climax, test, phase C, last point of support, and then we have a very, very dynamic rally. So that just tells us that selling is done throughout this whole structure, and now the price is ready to go in a more established uptrend. So also this rally confirms that supply is not a problem anymore. Look at the supply signature on this rally. So it's not as momentous rally than the previous one. It has more bars on the upside. It takes more time to travel the same distance, but at the same time, supply is not available. So in a way, it's a much more sustainable bullish move than the previous rally. But momentum is obviously decreasing. And then the next reaction is even less than what we've seen before. And look at the supply. So there is nothing there compared to the previous instance where we kind of go into the same area. The result is less as well. So we are ready to advance now in a more meaningful way. So here is the point of entry, this bar right here. And then here is the point of exit, this bar right here. And I want to ask Franz. So Franz, what do you think, what are your first impressions on this trade?
Okay, well, Rahman, I think you really pointed out the volume signature, and one of the things that we know is because people might be looking at this and saying, well, there's no volume to make this go up. but one of the things that we know is that if supply isn't present, if it's been absorbed, it doesn't take a lot of demand to get a move going. And it is so clear in this picture, especially this last reaction going into your point of entry. If you look at how, as price goes down, look at how supply goes down, which is exactly what you want to see. Going back to our tape reading, we want to see on increases in price, we want to see demand increasing, and in declines, we want to see supply or volume going down, and that's exactly the signature we're seeing here. So, and then your confirmation to buy, I really, really like that. We were talking before we went on. One of my issues is not waiting for the confirmation. So, I really like your whole rationale here. You're not waiting for the break, because we've got a little bit of a structure here. You're not waiting for the breakout from the entire structure. You're recognizing that this is a really nice backing up action, and as soon as you've got confirmation with that entry bar there that supply has been absorbed, and this reaction is done, you're in. So I really, really like that. And then as price travels up, it goes with some real momentum, and yet the demand is, it's not overly impressive. It's just, there's just no supply. So that's what I see.
Mm-hmm.
Maybe you can add to.
Yeah, actually, I was thinking about the momentum here, and to me, it actually seems like it's a little bit diminishing,
Okay.
relative to the previous rallies. And, that's why the point of exit is kind of like where it is. So it was more of the conditional exit, and I'm still, it feels to me like it was not correct. It was not correctly done. Why? Because, well, first of all, we see some continuation of pricing right here. So therefore, exiting on this like mini climactic bar would be even better. Uh, but the idea here was that look at the spread, how the spread is starting to diminish. We're seeing, supply coming in on supply tails, not a big result, so that's not a big deal. But we kind of anticipate, especially on this bar, where we have like a bar to push, then no demand bar, then some supply bar, and they all kind of clustered here. So therefore, I'm expecting some kind of reaction. Reaction comes the next day after the exit, and I'm thinking, okay, well, this was great, but look at the volume that comes in. There's nothing there to sell. So therefore, a questionable exit here, and I think it should be reflected in our post-analysis. So let's do exactly that.
Okay.
So I would say bias, yes.
Absolutely.
Timing, yes.
Yeah.
Character, oh, I
Definitely.
don't know.
I'd say yes. I mean, how could you not say that this is a nice move?
Well, I'm
It's
thinking about again the characters of these previous rallies. So it looks to me like momentum diminishes. So here we're expecting the same momentum to diminish, and it does. So my expectation probably was not that great. I'm gonna put 50-50. Franz, I'm hard on myself,
wow.
so
You are really hard on
that.
yourself.
Okay, point of entry, stop losses. Yes, I did not have the add-ons. That was not the position where I would have the add-ons. So the exit, I'm gonna put 50-50 as well, because even now we see that there was a somewhat better exit. And look how it just gaps, and the premium just gonna jump here much better than, let's say, at this point. So that was much more efficient. We will still, the jury is still out on how good this swing trade was. And obviously with the swing trade, you want to capture the swing, right? So like one,
Mm-hmm.
2, 3. So I wonder if we're in the vicinity of the top, or if there's going to be some kind of continuation. And it seems like it's holding. So this could become a worse trade as we go further. So let's do the variance. 1, 2, 3, 4, 5. So this is about 71%. And in the comments, I think the analytical comment here is just kind of anticipating what momentum will do. So I think that was important in this trade. And then just kind of wait, scale out on exit. Those are the two for me. Franz, what do you think? What other lessons could we extract from this analysis?
Well, you're in an option position,
Mm-hmm.
so whenever you get any kind of a reaction, you're immediately looking at premium, getting whacked.
Mm-hmm.
So I think you're being hard on yourself, because it's a shortening of the thrust that we're seeing on this second move up. To me, your intention was a swing. I think that was fulfilled, and if it continues to move higher, you can always re-enter, I suppose.
Mm-hmm.
But
all right, okay.
That's my
yeah, and I think this was a really good point. Again, it was a swing trade. Was it profitable? Yes, it was profitable. Did we take the majority of the move? Because that's the goal. The goal is obviously, and I think the goals could be different for different levels of traders. The goal for maybe like intermediate trader is just to take, let's say, between 50 to 80% of the trend movement or the swing movement. So, and that's exactly what we're doing here, or maybe we are not. We don't know yet. So we'll have to follow up, maybe have some kind of update on this position. Okay, let's go to the next trade. So let's switch gears and let's talk about the intraday. And you guys know that I do trade, quite a lot, especially lately. This year has been probably, the largest increase in my trading activity just in general. So I trade uh, institutional accounts now, co-managing a portfolio. So it's predominantly cash positions and predominantly campaign positions. So those positions, have been opened for months and months and months, going on a year since the COVID decline. Uh, then swing trading with options, so a different time frame, different instrument, different leverage. And then I'm also doing the intraday trading in the E-mini futures. And here is an example I've shown you before, but this is the most recent trade. Definitely, we'll talk about the exits, so they're not the most optimal. But let's just start with the analysis. Right away, when you day trade, you're coming in with some kind of daily bias. So the bias was up for sure after the reversal. So we're looking for the points of entry to the upside. That's what we're doing here. And sometimes, and I always tell this to you guys, that sometimes I'm just not available for a specific intraday trade. I'm not like there each day per se, or each hour per se, because I'm going from one meeting to another, and on the background I'm putting on the trades. And with the people that I meet, I usually tell them like I'm trading, so I might be distracted here or there. So that's kind of like the practice now. So we are having a decline, which has a very interesting volume signature. For those of you who are intraday traders and you guys know the nuances of, let's say, NASDAQ or S&P trading, you know that this type of volume signature, either in the middle of the day or after the open, is significant. It represents some abnormality in the price action. So you start thinking, what is this abnormality? So obviously demand is coming in, stopping the price action, and then we're reacting with the change of behavior, some testing again in potential phase B, upthrust action in phase B, which acts almost like a minus sign of strength. So we're seeing a lot of bullish characteristics. Our final test is of lesser degree, but of the same magnitude and much, much less a supply. So we know that potentially this could be a phase C, and from here the price could just go up, and that would be the beginning of the upswing. So I think the entry is okay. Uh, I was actually talking to one of my colleagues and discussing this trade, and I thought that it could have been improved. And this is where, for more advanced traders, you guys need to think this way. You need to think that, and the more I talk to advanced traders, the more I see where they're stuck, meaning that there is some kind of progress to the level that they are right now, and then they're set in their ways, and there is no flexibility, to maybe rethink a little bit, what could be a better, more optimal entry. I think that a more optimal entry would be somewhere here. I mean, I know it's not a lot, but if you want to improve, you have to think about those smaller things, more refinements. And obviously, I'm talking to somebody who's feels that, they're at the level where maybe they're a little bit stuck, but the level is really good. So advanced traders that require, kind of like those small, uh, nuanced uh, tweaks that would produce a better, more optimal result. And that would differentiate you from other traders. So that's important as well. So the point of entry was okay. Well, right away, the rally confirms that we are correct. And then there's grinding action. So we're just not doing anything drastic, but there is no selling. But at the same time, there is no really aggressive buying. And then the first exit happens again on volume abnormality, where we know that we are in some kind of climactic action. So the exit is right at the close here for the first unit, and we just hold in the second unit, and we're moving the stop loss into this level. Because if this level is being broken, then we're probably still either in some kind of uptrend or maybe in another structure, and I'm willing to go through that. So as the second unit is their first attempt to break out, second attempt to break out, and I thought that I was just being somewhat distracted with my meeting at the time. I felt emotionally that I wanted to get rid of this position. It was kind of in the way of my other things that I was doing at the time. And you really, really have to think about in the moment, what is it that you are doing when you trade? Um, is there that distraction that could like take you off the correct emotional decision? And I think that's what it was. So I'm moving the stop loss from this level to this level, and I'm just basically saying this bar cannot fail. Well, it does, but it fails very minimalistically. There is some demand on the last bar that comes in. This level is not violated, so would I have hold on to the original stop loss, I would have taken the next leg up, and my next exit will be this bar. And this bar would be exited on the same premise as this bar, because this is a buy-in climax. And on this particular day, it was just so visible. So that's the trade. Franz, so what do you think? What are your first thoughts and impressions?
Well, let's go back to the entry because I thought it was interesting where you said that an advanced trader would consider entering. The volume signature on that final widespread down bar is actually lower
Mhm.
than the previous the final kind of actual down bar. So the test, even though it has a big spread, it shows that volume is, supply is gone. So when you see that, I mean, you're the expert. How did you respond when you saw that big widespread down bar with the reduced volume once that was
I
completed?
did not do anything. I did
Uh-huh.
not do anything, but I mean, of course, in retrospect, we're kind of like seeing that. So I think this is the improvement that could be made on the test. So how does the test happen? Where is that? And with the test, it's the diminished character of the supply that we're looking for, and we're also looking at the same time at the result. For the test, would it be a high or low, right? So the test usually two things. One is structural, high or low, and then diminished supply character. So this is exactly what we're seeing here. So conditionally, the entry could have been a little bit earlier. It could have been also at the close of this bar because this acts as a confirmation of that test. And then obviously, where I've entered was a second confirmation of the local breakout. Um, so I think that there could be like two levels of improvement here, uh, you know, before the actual entry. All right. Well, what else, Franz?
Well, and these are 1 minute bars. Am I correct?
Yes. Mhm.
Okay, so
But
this is
hold, hold
happening.
on, hold on a second. Let me address this because this is important. Um, so someone told me like, why do you even use 1 minute bars? This is such a low time frame. I do not trade 1 minute bars. I trade structure. So on a 1 minute bar, I could see all of the swings, as they happen. So therefore, I don't even think that I'm trading on a 1 minute. I'm thinking I'm trading just intraday structures, and that's kind of like the perception that I have. Go ahead, Franz.
Okay, um, and that really wasn't my point. Wasn't what you're trading on. My
Mm,
point is that this happens very, very quickly.
mm,
So, you really have to be on your toes.
yeah,
And I mean, I completely understand you've got a lot of distractions. So, to catch this like you did, I think is, I would definitely give you a yes on the point of entry, even though you're saying it could have been a little bit better just because it's
okay.
happening so quickly and you got other stuff happening. Um, I like the idea of your exit on on that climactic bar.
Hmm.
Um,
Yeah, I like that too.
and I understand moving your stop, um,
Hmm.
but I mean, I
Sure.
understand what your rationale is. I think if you were totally involved in this and not doing other stuff, you might not have made that adjustment to your stop because you really haven't broken the structure, and if you're trading the structure, it is obviously a structure
Hmm.
here, and so those are my
Unfortunate,
observations.
very
Yeah.
unfortunate. I'm always in the pursuit of a perfect trade. Um, and again, guys, I'm giving you a lot of kind of like my beliefs about the market or trading in general, how I trade. And this is just where I am. Um, some of those thoughts might be a little bit strange, but that's okay. I mean, the trading itself is very counterintuitive. So usually the thoughts that are regular thoughts that we have are not going to be the most effective thoughts or beliefs that we have. So you kind of have to restructure your thinking a little bit. But I absolutely agree with Franz. This first exit was good. I should have held on to this stop loss and just be done. By the way, my also orientation here on the first target zone was uh, these two red lines. These two red lines reflect the selling that has come on this bar. This was a breakdown bar, and it had
Hmm.
some significant volume signature behind it, so it was selling. So this was the target zone, and this is the bar, the climactic bar that happened in the target zone. There was no hesitation in my mind to, scale out of one position, because I know that at least at the minimum we're going to be in some kind of trading range. And that's how it happened. This was the second bar of the same kind of quality nature. So it was a very beautiful trade day to trade. Well, let's go, Franz, through the post analysis. So bias is correct, timing is correct, character is correct, point of entry correct, stop loss. I'm going to say no. Why? Because the stop loss movement was not correct. And I'll also on the exit, I'm just going to say no as well.
Well,
Because
you got one of them right, so I give you a 50-50 on the exit.
50-50.
Yeah.
That's right. Okay, well, I already calculated the variance, so I don't want to calculate it again. So let's just go with that. So
You're
60,
messing up the curve here, Roman.
that's okay. So 67%. Franz, what are the comments, lessons that you might think of here about this trade?
This is, I mean, your analysis is just, to me, just a thing of beauty. So the first thing is that here we are at the end of 2020, and your analysis is 2020. You got 2020 vision. So that's my first observation. And secondly, I'm not an intraday trader at all, and for this reason, because you do have to be, you have to be
Present.
focused, and kudos to you for being able to do it with all the other stuff that you've got going on. So I don't have anything bad to say at all. I mean, I don't have any I shouldn't say bad. I don't have anything critical to say about this. To me, it looks like a great trade, and the leverage in futures, gives you a little extra degree of caution anyway. So.
Mm-hmm. All right. Well, let me also add some comments and lessons here. So I think that the stop loss movement is definitely on my mind with this trade. Um, Secondly, just analytically, just thinking about this area right here. So if I'm expecting a reaction, there should be some kind of either deterioration of the demand and then the reversal in the reaction, or emergence of the supply and the price moves in the direction of the supply. Do we have deterioration of the demand? Well, yeah, for sure. I mean, like there are some attempts to go up that fail. The price comes back into the trading range. I think this also was kind of like on my mind. These two attempts to break out and their subsequent failure, which should, in this case, I should have thought that those failures would bring a reaction into possible phase C, a true phase C. But there is no distributional supply whatsoever. So no supply, and that should have been a warning that this could be a continuation pattern. So just no supply signature, something to remember. And then also I wanted to kind of address, my busyness and my trading during the meetings, during something else that I'm doing. So I think I don't have any other solutions, guys. I was actually discussing it with somebody yesterday. Like how could I possibly trade during a busy day? So that was a question. That was the task to overcome and to think about. And I'm realizing that I will always have meetings. It's just inevitable. And usually those meetings are during the day, during the trading hours. So I have to, instead of thinking like, oh my gosh, I have to like totally focus on trading and so on and so forth. If it's not available to you, then you have to think in a different way. You have to create a routine, a system where you do other things and yet you do trading as well. So that's my challenge. And I know it might not be the best solution, but it is the best solution for the lifestyle or the business hours that I have. So I would say that rule number 3 is to have an ability to focus for short periods of time. What I mean by that is if I'm seeing something that is going on, like for instance, this area right here or this area right here, I need just to focus and to kind of like say to somebody in the meeting that, okay, hold on a second, give me like a minute, I'm trading right now, I need to go through this. And then just relax and just to go through the analysis, and then clarity comes, and you definitely could do a much better job. And then continue with your meeting. That's it. I mean, like once you define where the stop loss is, no movement, and then just follow the price. Franz, what else? Anything else?
Well, I think you covered it all. I mean, it's just have a realization and set expectations that take into consideration your life. You know, what can you do? You can't be two places at once. So in your mind. So
Yeah. Yeah, well, that's it for today, guys. Franz, thank you so much.
thank you, Ramon.
Kind of was fun to go through some of the trades, and you know, currently I have quite a lot of campaign trades. We still cannot fully get to them without like a meaningful market reaction where some of the positions will be closed. There are quite a few swing trades that I have on, and obviously I'm continuing trading the intraday time frame. So we'll have something for you then in the next 2 weeks. We've had quite a lot of questions from you guys, so we're gonna address those for the Christmas and New Year episode, and then in the new year we're going to come back to the anatomy of our trades and we'll discuss those. Happy holidays to all of you. Thank you for following this series, and thank you for following Wyckoff Analytics. You are a Wyckoff nation for us, so we appreciate this. And as usual, if you have any questions, comments, leave them under the video or email us at wyckoffasociates@gmail.com. And happy holiday seasons to all of you wherever you are. Franz?
Great. Well, Ramon, all I can add to that is happy holidays, and it's great working with you. It just, I've got a big learning curve. I'm still moving up, and it's been great for me to be along for the ride on this. So thanks a lot, and looking forward to 2021.
I appreciate this, Franz. Thank you so much.